What's going on, everybody? Johnny here. I hope you all had a wonderful weekend. I hope you guys are doing well today. I know a lot of people had today off. Some people didn't, some people do, but not anyone in here. So let's just go ahead and get this going. Here's the Bitcoin 4-hour chart. Let's actually start on a higher time frame here. So that noise that you hear in the background, the little ding dongs, those are liquidations. So if you are interested in the liquidation watch, this is what it looks like here. It's basically just a chart that will give you a little audible tone anytime either a large trade is made over a certain amount that you can predetermine yourself on a spot or perpetual swap exchange. And there are also these liquidation watches as well. So if you've been trading for a while, you know that large liquidations can lead to some pretty extreme volatility in the price. So I do keep this open just about all the time to really let me know when some major price action or volatility is taking place. All right, so let's go ahead and take a look here at the chart. This is the Bitcoin weekly chart. We did just get a weekly close, another doji candle. It looks a little bit looks like it has a bit of a bearish bias here. Bitcoin really has been putting in lower candles and dropping ever since the May crash, or not crash, the crash that we saw that started towards the end of April, but we've seen the price come down quite a bit ever since. Now, things are really not, I really didn't think that this correction would actually last this long, but it looks like we could be looking at somewhere, near August, September, possibly even November, before we really start seeing things turn around. Now, what's interesting is that, we did see the Fed come out and make an announcement. Let's go ahead and see if we can find that news here. So we saw the Fed come out and make an announcement saying they weren't planning or intending on raising rates anytime soon, likely towards the end of this year or in 2022, 2023. But we've seen traditional markets respond pretty well to this. So we saw the S&P 500, after looking like it was possibly going to break bearish out of this giant rising wedge pattern, it actually pushed into new all-time highs and broke back into this pattern. Now, this has happened quite a few times ever since the March 2020 crash. I did think that we were going to get possibly a breakdown here, but again, Fed came out, made a statement, pushed the price back into the pattern and back into new all-time highs. Similar to what we saw during 2019 heading into 2020 with this rising wedge pattern. Now, this was a bit of a smaller pattern that did break bearish back in March of last year. If you've been around, then you definitely remember that point in time. We saw a bit of a smaller rising wedge break bearish here back in 2018. Now, if we zoom out here to the weekly chart on the S&P 500, you can see we do have a bit of a rising channel here that is possibly approaching some sort of an apex here, letting us know that we could get a break to the downside really at any point. So it's teetering there. It really kind of depends on what kind of news we're going to see. So heading into last weekend, the dollar was looking pretty bullish. It did, appear to be breaking out of this double bottom pattern and then heading up towards that 97% on the index that we were really expecting. But it seems to have met some resistance here at the 92.5% resistance area. And we'll see really, what the dollar decides to do the rest of the week. So right now it's looking pretty bearish yet again, and if it pushes back to the downside, then we can expect traditional markets to perform well again, and might not see Bitcoin and the crypto market turn around, but we really should. Typically, there's been an inverse correlation with the DXY and Bitcoin. So when we would see the DXY break down, we'd see Bitcoin pump, or vice versa, the dollar go up, Bitcoin go down. But we've been seeing that inverse correlation start to diminish a bit. Let's go ahead and take a look at the total crypto market cap. So the total crypto market cap is looking pretty bearish, to be very honest with you. This topping pattern, a typical topping pattern that you see after such a strong move to the upside. And right now, this appears to be a possible head and shoulders, complex head and shoulders with a break to the downside. Now, you could say that this was a break of support, and we are possibly getting this retest here of former support, now resistance, which is not a good sign if we want the prices to continue pushing to the upside. But the good news is, the farther they come down, the bigger percentage gains that we'll be able to get when we do buy in when they come down, or if bottom at some point. So price action is a bit, ambiguous at this time, especially here with the total crypto market cap. I'm not really seeing any bullish developments here in the price. Let's go and take a look at the RSI. This is the RSI. Let's go and turn off the divergence indicator. Yeah. So looking here at the RSI, we did get a bit of a lower low and a higher low on the RSI. So that is a bullish divergence. So it would make sense to see, a bit of a push to the upside, possibly a relief rally. It would be nice to see the total crypto market cap push higher. And obviously Bitcoin and the rest of the crypto market should follow. But we're really, it's been pretty boring. It's been a lot of sideways movement, and we haven't been really seeing much here. Looking here at the 10-year rate, so we are seeing the dollar kind of hit a bit of resistance here, but we're seeing the 10-year rate fall, which really should correspond to a strengthening dollar. Now, considering, on the back of the Fed's announcement, we did see the S&P 500 again break into new all-time highs. It would make sense to see this 10-year rate start to rise again, but that's not at all what we're seeing. So, we are seeing the bond market gain a bit of strength here, but what this could be forming, this could very well be forming a bit of a falling wedge here. So we could see a bullish breakout here depending on how far down this 10-year rate really comes. Now, TA on this chart is, a bit different, but so far it's been pretty good over the year, and we've been able to predict these swings pretty accurately. Let's go ahead and take a look here. So this is something interesting. So the gold spot price, let's go ahead and zoom out here to the weekly chart. So if we look here at the weekly chart on the gold spot price, you can see we've been in this giant cup and handle pattern. I did break bullish across the neckline, and it came down, confirmed this neckline as new support. And then this would be the handle structure of a cup and handle. And it did break bullish out of this as well. And we came down. It looked like gold hit a bit of a wall here, but it came down and it confirmed this top trend line as new support. And right now it does appear to be getting a bit of a push to the upside. So over the past few days, gold has been trading. We have seen it push a little bit further to the upside. Volume could be better, but the breakout target of this enormous cup and handle pattern puts gold well above $2,800, likely, possibly, not likely, but possibly up above $3,500. So one of the things I've been talking briefly about in the group is we should start seeing a correlation between Bitcoin and gold. So when we see gold start to push, we should start to see Bitcoin push as well, considering these are technically two of the best inflation hedges that exist right now. I mean, unless you count hard assets like real estate, really gold is the inflation hedge. So, a traditional or textbook definition of inflation is when you start to see gold prices rise in the face of increased currency supply. Looking here at the USDT market cap, so it had been rising pretty significantly for quite some time. This is a 3-day chart. Let's just go to the daily. Now, USDT market cap was in this rising wedge, did break bearish, came up, and it's getting the bearish retest here. Possible confirmation of a move lower. Now, if we see the USDT market cap start to drop significantly, that would mean that that value is going somewhere else. So what I would assume would happen is if we see the USDT market cap start to fall, or the market cap dominance, excuse me, then we would likely see the Bitcoin price start to rise in response to this market cap falling pretty quickly. So that's where we're at, just looking around the market here. Again, the S&P 500, this is the daily chart, but it's just been rising and rising and rising without any real correction. So that really just lets me know, the higher we go without any sort of serious correction and, resumption of the trend, then it's likely that we're going to get a bit of a harder fall when it finally does decide to fall. So we, last week we did some TA here on the S&P 500, and we were looking at a possible rejection here and then possible market crash, move lower. That's not at all what we saw, likely because of the Fed announcing that they weren't intending on messing with rates anytime soon. So we did say buy the breakout above this level, this $4.35 thousand level here, and it's likely that we're going to see the S&P 500 push a bit higher over the next couple of weeks. If we look here, let's actually go and look at a different one. So here's the Dow Jones Industrial. It's showing a bit of the same thing. We had this rising wedge. It did a break bearish out of this rising wedge, but has yet again pushed back into that pattern. This is the weekly chart. So we could be looking, at a correction or possibly not. So another thing with the Fed not raising rates, keeping the economy, quote, running hot for a bit of time, we could see this push a bit higher. Now, it really depends on really when the big boys and girls start taking profits, because it's just a natural part of the market cycle. Once you see things rise this high, it would make sense to take profits and secure those profits into something else, like, traditionally would be bonds. So that's possibly what we're seeing here. So something to keep in mind. If we zoom out to the monthly chart here, actually I think I have one. Let's go right here. So yeah, so here's the Dow Jones Industrial. This was from the other week. Now it's been in about a century long rising wedge. And then if it does break bearish out of this rising wedge, and a rising wedge is typically a bearish reversal pattern, then we will likely see this come down at least to the 61.8 if it's going to resume the uptrend. If it falls below there, then there's a possibility that we could be seeing some insanely lower lows, some lower prices here on the DJI that we haven't seen in quite a long time. Even if we just come down to the 61.8 here, bearish breakout, then we're going to see prices on the DJI that we haven't seen since the late 70s, early 80s. So it's definitely something to keep your eyes on, especially if you're trading Bitcoin and crypto. Traditional markets really dictate where the crypto markets go. So moving back here, we did get, the bearish weekly close here after yesterday. And let's go ahead and zoom back into the daily. So Bitcoin really just has been in this bearish consolidation ever since it broke down back in the beginning of May. And we've really just been waiting to see what's going to happen. Now, we haven't gotten the push to the upside to test this former support, now resistance area. And we've been waiting really for a relief rally. I guess you could call this, push here from the beginning of June, so right around from June 8th all the way up to the 15th. We did, get about a week of bullish price action there. I suppose you could call that the relief rally. It didn't quite make it up here to this former support, now resistance area, and has since fallen a bit since then. So ever since the 16th of June, we've seen the price of Bitcoin fall all the way down to 28.6 thousand, and has recovered a bit since. But right now, we are still just waiting for prices to honestly come down a bit further. But what has me thinking here is, we should have gotten a push back up to test this former support, now resistance. Oh, we've got some people in the room. What's up, everybody? I hope you guys, you bought 42 Zcash for 116. Nice, dude. We'll go over some Zcash here. Actually, we'll take a look at some altcoins. So if you guys have some ideas, or if you have some altcoins you'd like to see some TA on, just shoot it in the chat, and I will do my best to get to those ASAP. But, most importantly here, the leading indicator that will really let us know what the rest of the crypto market is doing is Bitcoin. And right now, it is not looking very bullish. So let's go and zoom into the 4-hour chart. We're getting a bit of an M pattern here, almost like a double top. This typically precedes a move lower, and to take the measured move here for the move lower, just a really simple thing to do is you can take from here to here down to the neckline, and then a break down out of the neckline does put the price down under 30K, right about 29.4. Now, if we did get the bulls to step in here right about 29.4. That would be a good sign. That would be a higher low, and that would give us some indication that price is about to move higher. But right now, with this sideways consolidation, it is coming to an apex, so we should expect a move in some direction fairly soon to let us know whether or not this bear market is here to stay. And we're just going to have to wait for it to play out and bottom out in the next, 4 to 6 months likely, or if this is just, a fairly strong and extended correction before Bitcoin really gains momentum and then pushes back up into that 4 or 5, that fifth wave extension of the Elliott wave. So if you follow that, I'm not really an expert on Elliott wave, but I do know that, it is pretty significant. Now, a lot of people too, which has me thinking that it's not going to play out, is the Wyckoff, reaccumulation stage here. So this is definitely a textbook Wyckoff distribution, especially after we reached the peak here, and then we had this three-wave extension. And typically when you get this sort of extension, that means when you do finally retrace, you'll likely get a 1272 or a 1618 retrace extension of this first corrective wave. So if we take our fib retracement and then we just draw from the peak here down to the bottom, that gives us a 1272 right around here, right about 25.798. But one thing that really has been successful for me is using the anchored volume weighted average prices. So if you go here, click here, you get an anchored VWAP. It's right there. From the beginning of this entire bull trend, I started an anchored VWAP here, and that puts us at a possible low or bottom at $21,700. Now, these anchored VWAPs have shown some pretty decent significance in the price action so far. So if we say from the beginning of the breakout where this, parabolic rally really began, we seem to be holding support right above this anchored VWAP right now. So that is definitely a good sign. Now, a break below here, I would expect, price action to find some support right around here, right around the $21,800, $22,000 level. And then, if we break it down below that, then we'll be looking at, traditionally support levels that really have shown significance in every time Bitcoin breaks to the downside. Now, one thing you guys can go and get, it's called the Bitcoin Golden Ratio Fibonacci Multiplier. So if you're familiar with the Pi Cycle Top, this is really just a spin-off of that. It's the 111 and 350 moving average, and they're multiplied by Fibonacci ratio. So the 111 moving average multiplied or divided by certain Fibonacci ratios will give you these different moving averages. And if you look back, every capitulation sell-off event has really held support on one of these different moving averages. And again, with the Pi Cycle Top, this is the 2-day. It did call the top right here, and it's been pretty damn accurate. So it's really why I haven't put out a video, over the last week or so, is because Bitcoin is really just trudging along sideways. It hasn't really done anything surprising, and it hasn't really done anything that really garners really any kind of crazy attention. Now, you would consider, or you would expect that since, the Fed came out and said they weren't raising rates, that we would see Bitcoin push a bit higher and the rest of the crypto market as well, but we haven't seen that. Now, again, we are seeing that out of traditional markets like the DJI, and the S&P 500, but again, we're really not seeing that out of Bitcoin, which is a bit saddening, but that's definitely letting us know that it's possible when Bitcoin finally does break out, we could see it push to the upside pretty quickly and pretty strong. So we'll see what happens there. All right, so Moro Mata wants to see Zcash. So let's go ahead and check out a Zcash chart here. We'll do this, and then we'll check out the Ethereum chart before we move into anything else. So here's a Zcash daily chart. Now, this is one of the OG cryptos. It has been around a while, excuse me, and I really see this one. Zcash was really making some waves back in 2017, 2018, and then, ever since they decided to ditch the privacy protocol, we really haven't heard much out of Zcash. But looking here at the 5-day chart, we've had a ton of red candles consistently for a bit, and it would make sense here to come down and find support right around here, right around previous resistance, now support levels, and then push back up to the upside. So let me see. Let me just go to the weekly. Let's check some indicators. So we did get, some nice sell-off volume back here, back in mid-May. Looks like the RSI, we got lower low. Not really looking very good here. I mean, we do have a bit of bullish divergence here, but those aren't technically swing lows, so we really don't want to count that. That would be cherry picking our swing lows. And then, our MACDs really just looks like this bearish price action could just be getting started, but we could also see some sort of a reversal coming here, because we see this starting to round off a bit, even though we did put in a bit of a lower low here, the same way we did with Bitcoin. So we could be seeing Zcash, possibly getting ready for at least some sort of a relief bounce, or, possibly a full reversal. So Zcash is definitely one of my favorite altcoins out there. So if we say the neckline is here, bring us down here, and then we take a fib extension tool. I'll go to the peak, come down, we'll say this is the bottom, Then, if we get a breakout of this falling wedge technically would give us a bullish target of, I'll take the measured move here, so the breakout is right around here. That puts us near the 0.5 fib extension tool. In order for me to get bullish and expect, a further move to the upside, we want to see price action break across the 50% fib level and get a candle body close here, at least on the daily chart, above the 50%. Then it's possible we could see price action come all the way up here to the 1-to-1 extension, all the way up at $1,800, and that would be a pretty hefty move out of Zcash. Now, it would likely take some time to get there, and it really depends on what traditional markets are doing, but it's definitely possible, and Zcash is really a good long-term hold. You can probably hear the beeping going on in the background. Again, this is the liquidation watch tool, so if you want to try this thing out, it's pretty cool. You can make your liquidations or certain trades, whatever threshold you decide, you can give them audible tones. So if you are trading and on these computers on the screen all day like I am, this gives you the ability to get up and walk around and do some other things, because you can hear what's going on when a ton of trades go through. So I use this thing pretty regularly. But yeah, Zcash looks pretty decent. So again, you can use this Fibonacci ratio multiplier. It's been fairly accurate. So when you get breakouts across the 111 or the 350 MAs, the next levels, these next moving averages, are just Fibonacci extensions of the 111 moving average. So, if we see Zcash, get the bounce here, then we'll likely see it come up to here right around 180, 181, then possibly, a bullish confirmation, a move back down to confirm this as new support before pushing further to the upside. Again, I want to see it break across the 50% fib extension from the low to the high. That would let me know that we're looking at some bullish continuation here out of Zcash. But if it doesn't at least break the previous all-time high here that we saw back in mid-May, right about $373, then we could be looking at more sideways action out of Zcash. So really, over these next couple of weeks, depending on how long Bitcoin stays in its consolidation pattern, we might see more opportunity in small cap coins, because they might get some pumpage really before the rest of the market gets going. So again, Bitcoin really looking pretty bearish here, to be honest. We're really waiting for the break across this overhead resistance here. But once Bitcoin does break this level right around here, and you can see it confirms with the VPVR right about 50K, then we'll start to get pretty bullish, and we'll start to be looking for some bullish continuation here out of Bitcoin. But right now, it's really in an ambiguous zone. I'm not really touching any trades here. I know some people are trading this range, but I am expecting a pretty powerful breakout in either direction, and it really depends, like I said, on what traditional markets are doing. Let's go ahead and check the Ethereum USD chart, and then we'll check the Ethereum Bitcoin chart. And I found something pretty interesting there too. So again, Ethereum showing a similar price action structure to what we just saw out of Zcash. And over the past few days, it's been doing, been completing this topping pattern here. So as you can see, Ethereum too was in a pretty strong parabolic structure here, the same way Bitcoin was, the same way just about everything else was. Let me go see here. So if we say that this is our parabola here for Ethereum, now Ethereum, not just Ethereum, but typically when you get this parabolic structure, you usually get a blow off top after the price will break the parabola. You get that push to the upside, and then you usually get a 1618 retracement. So if we take a fib retracement from the peak here all the way down to the start of the parabola, the 1618 would take Ethereum all the way down under $400 again. But I'm not so sure that's what we're going to see, but it's definitely possible. There's been a lot of buzz about Ethereum, Ethereum flipping Bitcoin in terms of market cap. So, we'll really see how that plays out over the next couple of weeks. There's a lot of good news with Ethereum as well, moving into the Ethereum 2.0. So let's take a peek here at the Ethereum Bitcoin chart. So I did some TA on this last week. And it does seem to be playing out. Oh, this is actually from 22nd of February. So it did came out. It met our target 2 here. Again, it's putting in this topping pattern against Bitcoin. So it does look like, we could see Ethereum versus Bitcoin move to the downside. Now, there's quite a bit of room here for Ethereum versus Bitcoin to fall. If you look at the VPVR, we have a bit of a gap here until we reach some more high volume node areas, and there does appear to be a ton of support here right about 0.03 Bitcoin, and it would be nice to see Ethereum gain a bit more ground on Bitcoin, and we really should see it a bit higher in terms of its valuation versus Bitcoin. So here, we do have a bit of an Adam and Eve. I wouldn't really call this an Adam and Eve because this first bottom is a bit higher than the second bottom. Typically, an Adam and Eve double bottom, you get a bottom that is low and then a bit of a higher low before pushing to the upside. But what we do have is a pretty obvious rounded bottom here. And then this would, let's go ahead and delete this previous TA here. So we do have a bit of a rounded bottom here. And if we say that our neckline is here on this rounded bottom, then, we could have just came down, gotten the retest, and Ethereum could be getting ready to push a bit higher versus Bitcoin. So if that is actually the case, then we won't see Ethereum drop in price. We'll actually see Ethereum drop in price versus Bitcoin. Now, what could happen is we could be about to see Bitcoin fall further, and we might just see Ethereum not fall as much or not fall at all. So this is really just the Ethereum and Bitcoin price. So this is just showing the strength of Ethereum versus Bitcoin. And what we're seeing here is a possible retest of this neckline before pushing higher. And this measured move here of the breakout of this possible rounded bottom pattern would give us a move all the way up here, right about almost at 0.1 Bitcoin. So that would make sense, and that would also give us the possibility of another inverse head and shoulders forming. So if you can kind of see how this would work here, so we have this one here, that would be the head, and then this would be our possible head and shoulders. Looks pretty sloppy, but that's what could happen here. And then the measured move of this pattern would be something pretty impressive. Let's go and bring that up here. And then we'll say the breakout of this neckline here. We'll move this neckline up there. That would give us about a 1.17176 versus Bitcoin. So Ethereum is honestly looking pretty strong. We'll really see what happens here. Looking at, these are mostly altcoins versus Bitcoin. So these are Bitcoin pairs. We're really not seeing much in the way of, impressive gains. Everything does appear to be in the green, but, versus Bitcoin, we're really looking at like 1%, less than 1%, 0.12%. Nothing really impressive versus Bitcoin here. Let's go ahead and take a look here. Let's go back here. So this is the Bitcoin chart that I did go over in the last video that I published about 8 or 9 days ago. And when we look at this, we can see some pretty similar price action to previous tops. So for example, if we go back here to 2019, we could see, we did put in some bearish divergences before price action did finally top out and start to push back to the downside. And that's exactly what we saw here. So we saw, bearish divergence after bearish divergence before the price finally rolled over and caught support right here just around the $30,000 level. Now, if we look at the same thing back here in 2019 heading into 2020, you can see this was more of a descending triangle pattern versus what we saw here, which is really just more of an M pattern, or even you could call this a rising wedge that broke to the downside. But either way, it broke down, and right now we're in bearish consolidation, the same thing we saw here. Now, when we were seeing bearish consolidation here, I remember watching this price action very, very closely, waiting for the bottom to get in a nice trade before Bitcoin was about to push to the upside. And this was before, we saw the giant pandemic coming and the March 2020 crash. So Bitcoin took off out of this bottom pretty strongly before peaking right in February, right before this massive crash. So what we're seeing here is something similar, but not necessarily the same. So if we look back in October of 2019, we saw a pretty nice push to the upside here. As price tried to recover, but again, it was rejected here. It saw a 43% gain in a matter of 5 days. So that's definitely, pretty strong. Right here, we're not seeing the same thing. So, between points 1 and 2 of the RSI bottoming before again pushing to the upside, we're really not seeing, a strong peak number 6 here in the RSI. What we're really starting to see form here is a possible head and shoulders you really can't call this a bear flag or bear pennant because we still are putting in lower lows. So this is really a bit difficult to tell where we're going. But if we take a fib retracement here from the peak down to the low here, we are getting a bit of a bounce here at the, I want to say, that's a 382 fib level. So maybe it'll hold support here on the RSI, which will let us know that price action may be about to hold support as well. But if we zoom out here to like a 5-day chart, you can see that there is a bit of support here. Oops, maybe not there. Let's go to the daily. Go ahead and blow this up. So the RSI has held support here. We've gotten 3 touches on this trend line going back all the way to November of 2018. And we did get a bounce here again back in 2020, right after the massive crash. And then we did get a bounce here back in late May. Off of this lower trend line. So this trend line is definitely significant, and I would assume that after this bullish wave is about to complete and we do see the small retrace, maybe we get a bounce off of this lower trend line yet again. But it's really, honestly, it's really hard to tell. Over these past couple of weeks, I've really had to dive in and really think twice about my overall thesis about where Bitcoin is going. But just from experience, typically my TA is not wrong. I'm just a bit too over ambitious and sometimes things play out a bit later that I had been expecting, earlier. So again, right now we're in this consolidation range here, the same thing that we saw back in 2019, and it looks like we're seeing something pretty similar here. So after we broke out of the topping pattern and now we're in the bearish consolidation, right here, we could see Bitcoin did put in a bit of a rounded bottom here. So we put in low, lower low, and then lower low before finally pushing to the upside here. And we could be looking at the same thing here. So we've already put in one low and then a lower low. So I would expect, possibly if this same scenario is going to play out, possibly one more lower low before Bitcoin finally turns around, the bulls step in and start pushing the price back to the upside. But it's really, it's speculative at this point, which is why I haven't been putting out, consistent videos over the past 10 days or so, because I'm really trying to find out, what I think is going to happen. I'm looking for more data. I really want to know, where the price has the potential to go, what the sentiment is, and really what the overall health of all markets really look like right now. Again, if we bring up this Fibonacci ratio multiplier, we are holding support here on the 350 daily moving average. A break below here would take us all the way down to this negative Fibonacci ratio just under 20K. But again, if we broke to the upside, we'd find some pretty strong resistance right here, right about $48.5 thousand. But if we see Bitcoin break across this $61.8 thousand level here, then I will flip to being extremely bullish on the price again. Let's see where we're at in terms of moving averages here. So this is the 21 weekly. So the 21 weekly is above us right now. Again, this would be the main area of concern. So if we can break across this 21 weekly, we'll be back above the traditional bull market support, letting us know that we are likely due for some bullish continuation and Bitcoin heading into higher prices as we push through Q3 of this year. So that's sitting right at $41.37 thousand. If we look at I think this is the 34 weekly. So the 34 weekly, Bitcoin is holding support there right now. A break below here, I would look for price action to head down to the the 55 weekly. So again, I use all Fibonacci numbers for my moving averages. This 34 weekly is actually the low. So if we change that to the close, it'll give us a bit of a higher number here. So we are actually below the 34 weekly exponential. If we look, I think this is the 55. No, 55. Close. So if we look at the 55 weekly, we are holding support there. So right now, price action is between the 55 and 34 weekly exponentials. A move down lower, we would look for possible support at the 84 weekly moving average, which would be the next Fibonacci number lower. So all right, so that's where we're at there. Let's go ahead and take a look at these logarithmic growth curves. So here on let's go to the 2-day. You can see once Bitcoin pushes above this log curve, then, we come up and we typically peak off this top and then come back down back into the white. So that's not really my favorite curve. Let's look at this one here. Okay, this one's a bit better. So typically, if you buy when Bitcoin comes down and touches this green logarithmic growth curve and then sell when it gets above the midpoint, you're typically doing pretty well. Here, it does appear that Bitcoin has came down and bounced off of this logarithmic growth curve here, which is sitting just under 30K. A move down below that, then we'll likely see, Bitcoin coming down to visit the sub 20K levels, which a lot of people are really calling for. Now, when Bitcoin broke bullish across this level into new all-time highs, one thing we did not see was a retest and bullish confirmation of the previous all-time high just under 20K. So it would make sense to see something like that happen as well. Let's go ahead and take a look at the CME chart. So the CME chart will tell us something too. We do have a few gaps open that could likely get filled, when Bitcoin finally does decide which way it's going to go. We have the CME gap down here, 23.6 would be the low there. We have a $26,000 CME gap still open. We do still have two gaps open above the price. The first one with a high of 50.2 thousand, and then the next one all the way up at 61. $9,000. So, it is likely that we could get Bitcoin to push up and close those gaps, but, we'll really see where it's going to go. And it's still likely that we could see Bitcoin come all the way down and fill these lower gaps at 11,110 and 96.15. So those are the gaps that are still open. Looking at here at the indicators on the CME chart, it does appear that we are possibly putting in a bit of a bearish divergence here on the RSI. Again, the MACD does not look very strong, but we did get a bit of a bullish confirmation here. So when the price came down and bounced, we didn't get a bearish cross. We instead got a bullish confirmation. But here on the volume-weighted MACD, it does look like we are about to get that bearish cross. So we could be about to see Bitcoin move down to some lower prices. Looking at the stochastic, we got a bit of a bullish cross, but it does appear we may be getting a bit of a turnaround here. So the slope is starting to turn back positive, and we could be heading closer towards another bullish cross there. But again, right now I'm really not liking this price action. I'm not in any trades. Really, I just have buy orders still open at some of these different price levels that, if you're in the group, we have discussed. One last thing before we wrap it up here. This would be, so one thing I was looking at here, let's actually go to the 8-hour chart. So, diamond tops and diamond bottoms, they're pretty common patterns in Bitcoin and in Forex as well. Here on Bitcoin, since it broke down out of this top pattern here and started this bearish consolidation, we are seeing something that is very, very similar to a bearish or a bullish diamond bottom. So diamond top, will usually play out, followed by a diamond bottom, pushing price action back up near the previous support levels in a diamond top. So right now, we see this broadening structure that leads into some sort of triangle. So the definition of a diamond top or a diamond bottom, it's a two-structure pattern. You get a broadening structure here followed by some sort of triangle. And after you get a sell-off into a diamond bottom, that's how you know it's a diamond bottom versus a diamond top. So if we want to see a diamond top, let's actually go here. If you've been following the channel or if you're in the group, then you know what I'm about to show you here. So if we look at the DXY or the dollar weekly chart, it was in a textbook diamond top pattern, and it broke bearish here right after things started to recover a bit from the March crash when the Fed started kind of inflating the currency a bit there. But what we're looking for here is, the dollar to come back up and retest these former support, now resistance levels before pushing further to the downside. And in doing so, obviously, we would see some pretty bullish price action out of Bitcoin. But that is a diamond top. So what you'll typically see following a diamond top, now this is a pretty high time frame. This is the weekly. Following a diamond top, you may see a diamond bottom. So a diamond bottom will push back up to the upside, where a diamond top pushes to the downside. So if we go back to this Bitcoin chart, we could be possibly looking at a diamond bottom here, and the measured move of a diamond bottom takes us all the way. So if we go from the low to the high here, so a measured move breakout. So if this was the breakout part here of this overhead trend line of this possible ascending triangle, and if this is an ascending triangle, then we've already broken bearish out of it, and we could be about ready to push further to the downside. But the measured move here is right near our 48K target that we have went over a few times before. But right now price action is not looking very strong. It has broken bearish across this support level right here. So we could be looking at Bitcoin possibly coming down and meeting these measured move targets of one of the two bearish harmonics that we did go over last week. So it's not something I really want to go through right now because I'm not really sure if they're going to play out. But what I'll do is show you guys what I'm talking about here. Okay, yeah. So here's what we were looking at over the past week or so. So we had, a few different harmonic situations possibly playing out here. So here would be a bearish bat or a bearish Gartley pattern possibly breaking to the downside, giving us a measure move all the way down at 26 or 25K. But, if we did find support here, we could be looking at a bullish 5-0 harmonic pattern, giving us a measure move all the way up towards $44,000. A bit ambiguous again there, trying to figure out really which pattern was going to play out. We hit this sell-off target right here pretty accurately, and then we were possibly expecting a move back up here. If this bullish 5-0 harmonic was going to play out, this is where our aggressive buy was. We barely missed it by like a couple $100. But if we do get the push to the upside here, again, we haven't put in a lower low, but we have broken this support level here. So, would make sense for price action to come up and either break across this lower trend line or get a rejection here that would confirm the bearish breakout to the downside. One thing we could possibly be looking at here is, I hate to say it, but a head and shoulders. So we could be looking at a move again back to the downside. Head and shoulders target will again put us right where the bearish harmonic measured move was, right here, right at the 1272 of what would be the XA move here. Okay. So that's it. That's all I got for you guys. If you're interested in taking the technical analysis course, we put a ton of time and a ton of work in this thing. Let me bring it up and I'll show you guys what it looks like. So go to the website, 3candlecollective.com, and you just go in there. You'll go to members only, if it'll load, and then you'll click on the TA Basic Training course. So it's 44 videos, it's 6 total chapters. You can get through these at your own pace. You can skip through. I mean, it's not recommended to skip through. If you go through each video one by one, then I've gotten some pretty good feedback. It really helps people bring them up to speed on how to do technical analysis, really how to read charts. So that is really, one of the most important things, especially if you're a new trader. This TA course is pretty in-depth, pretty detailed. Each chapter has its own chapter PDF. There are some tools here that are available. I go through pretty in detail risk management, which is the most important part of trading or investing that, a lot of trading groups really don't offer that. So, risk management, after you've learned technical analysis, if you don't know how to manage your risk, chances are you're not going to do pretty well when it comes to trading. But we have that, there's a ton of different resources in here as well. So I made this A to Z catalog where I have just a ton of different PDF information in here. There are textbooks in here. So, if you want to learn about harmonic patterns, there is 3 different versions of the harmonic patterns by Scott Carney. These are pretty useful, and the more you review them, the more you really understand how to identify and how to trade harmonic patterns. So that's something that's pretty cool. So if you guys are interested in taking the course, shoot me a message or go ahead and go to the website and shoot us your information. So you just click here, go to the website, submit your info, and we'll get back to you as soon as possible. Now, we do still have a few free open spots. So if you're interested in taking the course for free, go to the website, shoot us your info, and we'll get you going and set up with that as soon as possible. But other than that, make sure you guys join the free Telegram group. The link is in the description below, and I'll catch you guys in the next video. Peace.